A new trade agreement with China is catapulting a group of organic heavy metals into the spotlight. President Trump announced the impending tariff truce on June 11th, writing on his social media site Truth Social, "Our deal with China is done, subject to final approval with President Xi and me. Full magnets and any necessary rare earths will be supplied up front by China." Rare earths, a group of 17 metallic elements, have unique fluorescent, conductive, and magnetic properties, which, as you can imagine, make them highly useful components in high-tech products like smartphones, electric vehicles, and even F-35 fighter jets. Once a dominant force in the rare earth market, the U.S. has ceded its lead to China, thanks to Beijing's aggressive subsidies. This shift has ignited a geopolitical scramble, underscoring the critical economic importance of these elements. On this episode of Growth Stories, we delve into the world of rare earths and explore how recent trade talks have brought this often overlooked market into global focus. China's rare earth export limits were a direct response to U.S. tariffs, serving as a bargaining chip with the potential to disrupt economies and snarl American industrial supply chains if trade tensions between the two superpowers continued.
The great irony here is that rare earth elements aren't exactly rare.
That's Reed Blakemore, head of research and programs at the Atlantic Council's Global Energy Center. He explains that while rare earth deposits exist worldwide, their rarity comes from the difficult and costly process of separating them from one another.
The challenge actually isn't the availability of these rare earths. It's actually the economics associated with retrieving them in the first place.
China effectively monopolizes rare earth extraction and refining. The U.S. Geological Survey estimates China mines around 70% of the world's rare earth products and controls over 90% of global refining output.
And I think importantly, they have a significant amount of market share of a lot of the precursor components that rare earth elements ultimately turn into. And so they're able to operate almost a closed loop supply chain. And that's afforded them an extraordinary amount of control over the rare earths market entirely.
The rare earth industry can be broken down into three stages: the upstream or mining of rare earths, the midstream where elements are processed and separated, and the downstream where those elements are manufactured into components like permanent magnets. Blakemore attributes China's power over the rare earth market to a decades-long strategy of subsidizing and investing in the entire supply chain.
Even here in the United States, where we've had some success with developing new upstream rare earth element resources, we've consistently found ourselves in a position where those resources still need to be sent to China for processing. And that does very, very little for our ultimate goals to de-risk the supply chain, or at the very least improve its resilience.
And those risks became more apparent during the US-China tariff standoff, particularly when it comes to the elements needed to make permanent magnets. These magnets are used in almost every single technology that's electrified or requires a digital signal. They're up to 15 times more powerful than iron magnets and don't overheat when placed in small components. China makes about 90% of the world's supply of these rare earth magnets, and Beijing restrictions wreaked havoc on many critical industries, most notably the auto industry, which is the largest consumer of these products. In May, Ford temporarily halted production of its popular Explorer SUV because the company's supplier ran out of magnets. And in April, Tesla CEO Elon Musk warned investors about the impact magnet restrictions were having on the company's ability to manufacture the Optimus robot. China has agreed to a 6-month limit on rare earth export licenses for U.S. automakers, a move that experts believe grants Beijing leverage in future trade disputes and creates uncertainty for American industries. Blakemore says these cross-sector disruptions illustrate how crucial rare earth elements are to national and economic security.
As demand for rare earth elements has grown to now be an economy-wide issue, the tightness and concentration of the supply chain within China has reached really a fever pitch to where now this is a challenge that we can't ignore without taking on significant economic and national security risks.
Blakemore says policymakers have long known China's rare earth dominance could be used as a geopolitical weapon. In 2010, Beijing proved this by banning rare earth exports to Japan over a territorial dispute.
We know that these supply chains, in particular the rare earth supply chain, is a significant strategic bargaining chip for Beijing, and it's one that it's willing to use.
And China leveraged this in recent trade negotiations. In April, the Ministry of Commerce limited exports of 7 rare earth elements, a move made in response to U.S. tariff increases. Although most U.S. tariffs were later paused, China's restrictions remained in place. A primary aim of recent negotiations was to ease restrictions of China's rare earth exports, as agreed to in Geneva in May. Blakemore says political and industry leaders in the U.S. need to act quickly to resolve supply chain dependencies, but he says the nature of the rare earth market has made it difficult to get any momentum here in the States.
It comes down to the reality that critical mineral markets in general tend to be small, opaque, and volatile. And rare earth elements are no different.
On top of that, new ventures also face challenges from lengthy permitting, high operating costs, and major environmental concerns, as rare earth operations are energy, water, and land intensive. The United States currently has one of the longest lead times in the world for developing new mines. A 2024 S&P Global study found that it takes an average of 29 years for mines to go from discovery to production. That's longer than any other country in the world except Zambia. S&P analysts note that the long lead times stand in contrast to the country's sizable resource base. While there's a handful of startups trying to establish mining operations in the US, there's only one mine and processing facility of scale currently up and running: MP Materials.
You have community challenge around the sites of these assets. You have significant regulatory hurdles that you have to overcome in order to put a new asset in place. China doesn't have those same restrictions, and that's part of why it's been able to develop such a robust market share across the rare earth element supply chain. So it's not that there isn't sufficient attention to this, it's that the circumstances under which the West in the aggregate will have to develop alternatives are much more difficult amidst a mineral class that is already really hard to navigate because of its opacity and because of its size.
The rare earth market has been a key focus for the Trump administration. Blakemore says policymakers have increasingly invoked the Defense Production Act and intensified Department of Energy initiatives to stimulate interest and investment in new rare earth extraction and processing efforts. An April executive order by President Trump launched an investigation into the national security implications of U.S. reliance on critical minerals. The order underscored that an over-reliance on foreign critical minerals and their derivative products could jeopardize U.S. defense capabilities, infrastructure development, and technological innovation. This strategic focus on rare earths is also behind the administration's engagement in mineral agreements with Ukraine and its attention toward Greenland, which holds the 8th largest rare earth reserves in the world.
As you know, we're looking for rare earth all the time. Rare earth is called rare for a reason.
The Trump administration has been very and uniquely aggressive in terms of trying to alleviate some of these supply chain dependencies, as well as use strategic foreign policy as a way to bring other countries into the fold in order to build the community or build the economies of scale in a alternative supply chain that is going to be absolutely critical for a Chinese alternative to survive.
Blakemore explains targeted tariffs could help domestic and other global rare earth producers compete with China.
A tariff can be used to set a price floor that effectively forces Chinese inputs into a midstream, for example, to be sold at the level that a domestic producer would be selling them at. It prevents China from being able to undercut the midstream in a creative way that I think would, over time, allow not just domestic midstream activity, but allied midstream activity to compete more effectively against China.
But Blakemore says the U.S. won't be able to do it alone.
Any sort of price floor or tariff regime would need to be done in concert with a group of trusted partners around the world, because a closed loop supply chain in the United States won't be able to compete as effectively with the economies of scale that are present within China, but also that China is able to deploy around the world, given that this is a global demand picture for these rare earth elements. It's not just a US story.
Even with the latest developments in the US-China trade talks, experts like Blakemore say shoring up the rare earth supply chain will remain a high strategic priority for the United States.
The message here is to expect more volatility, expect more government intervention in these supply chains, because these are now so strategic that governments around the world are seeking to secure their access to these supply chains and ensure that they're not vulnerable to China's ability to either manipulate supply chains and create economic pain, or given the utility of these minerals to defense applications, use them actually as a way to influence other countries geopolitically speaking.